But unfortunately, what we've seen since the late summer is that the market predictions have started to creep up again, that the base rate will be held higher for longer by the Bank of England because of stubborn inflation. So I'm going to tell you where the market thinks the Bank of England base rate will be over the next 5 years. And it's not all good news. So here's the article on screen where I look at what the market is predicting will happen to the Bank of England base rate in the future. Now, at the top, there's a simple summary table that shows you that the current Bank of England base rate is 4%, but the market doesn't think the base rate will necessarily be cut again before the end of 2025. Realistically, the market thinks we might get another base rate cut in the spring of 2026. So by early 2027 there, you can see in the table, the market predicts that the Bank of England base rate will be 3.63%, there or thereabouts. So that means one or two more base rate cuts over the next year or so. But what's important is you need to put these predictions in the historical context of other predictions from the past. You can see that the predictions of where the market thought the base rate would be over the next 5 years have changed a lot. So each line represents where the market was thinking the base rate would be over the next 5 years based upon the information they had at that date. So the blue line was the prediction made in September 2024. The green line is the current prediction, and the other colours are predictions made in between those two dates. If you focus on the blue line for a second, you can see that the market predicted that the base rate would actually stay just above 3% over the next 5 years. So it was a very optimistic outlook. Then if you go on to January, the market panicked and thought the base rate would be stuck above 4% for all of the next 5 years. And that was because of concerns about inflation. But then as the year progressed through March and into August, we saw the predictions of the base rate falling of where it would be over the next 5 years. So it was more optimistic. They thought the Bank of England would be able to start cutting the base rate, which would be good news for mortgage holders. But unfortunately, what we've seen since the late summer is that the market predictions have started to creep up again, that the base rate will be held higher for longer by the Bank of England because of stubborn inflation. So the Bank of England tends to cut rates when inflation is under control. It tends to increase the base rate when inflation is higher than its 2% target rate, which it currently is. So the market now, if you look at that October prediction, which is the green line, is higher than the August prediction. And it's predicting that the base rate might dip a little bit into the early part of next year, as I've already mentioned, but then we'll get back to that 4% level within the next few years and be there in 2030. So that's not great news for mortgage borrowers. There's a little bit more positive news if you're a saver, of course.